It would be great to have someone who could do our work for us, right? Someone to prevent us from making mistakes. Someone to assist with our routine professionally and allow us to devote our time to communicating with our closest people. If only we could get results without wasting our time for nothing. Unfortunately, it's impossible in real life. But wait, Light Forex Social Trading. Spend your time doing what really matters to you.
Good morning, good morning. New month, new challenges. 1st of July, 1st of August, I'm sorry. 1st of August 2019, 8 a.m. CET. Piotr here, meaning that we are going to cover live pre-London Open only here on Light Forex Global YouTube channel. Huge development yesterday. Dollar bulls did what they were not supposed to do, I would say. Anyway, let's start with risk boarding, guys. Please bear in mind, trading effects on margin, trading crypto on margin carries a high level of risk, may not be suitable for all investors. You can sustain a loss of some or all initial investments, so please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. Okay. So what we have here, huge development, I would say, because on the dollar index we closed. We are going to talk about this in a second. We closed above November 2016 entry. That was the month of the presidential election in US. Huge development from the bear's perspective on euro dollar. Huge breakdown. So there is looks like 110 psychological level is the next, but medium term I think we can start to discuss about the possibilities that market will close the gap related to the post-French presidential election in April 2017. From the monthly chart, looks like that as long as we are below 115, 120, it looks like the direction might be towards the parity. Going to try to cover all of these things. A little bit negative developments on the indices. We'll try to cover this as well. But before we go through the charts, let's check the agenda calendar. What we have here, and I think the top event today is of course Bank of England rate decision, and then of course Carney speaks, and we are going to cover it live, of course. So you are more than welcome to join me 1:45 p.m. CET, 12 a.m. London, right? And we are going to cover this event live. And the question is, are we going to see 120 on cable? We'll see. Later during the US session, top news is going to be ISM manufacturing PMI, construction spending. So we will see. Let's start with the charts today, guys, and let's switch to Let's switch to the dollar index at the very beginning. There you go. So that's what I've mentioned a second ago. Strong, maybe not huge, right? But anyway, the strongest close, monthly close in 2019 overall. Close above this monthly open over here when we were talking about the November 2016, the month when we had the presidential election in US, right? Now we are approaching this possible supply. The only thing is worth to mention here from this monthly chart perspective on the dollar index that we can discuss. That's the supply, then it's February 2017, then the low from the March 2017 which has been broken, right? But everything been tested already in May 2017. So it might be the case here that the way is open to the upside on the dollar index, right? Way is open to the upside on the dollar index. So now, of course, you don't want to chase the price. You don't want to be the front runner. So from that perspective, we have our demand is a combination of the range to the downside in June, right? With this breakout of the previous month of the July, right? So in that case, 97.60 down to 96, a little bit wide, but it's a monthly chart, is a whole possible demand zone on the dollar index, right? So let's get back to the charts. Particular currency pairs, and let's start with euro dollar, and let's start with monthly chart as well here, okay? Because as I mentioned, we have a huge development with that monthly close yesterday, right? Because we close, that's the lowest close in 2019, no doubt about it, right? Also, if you remember, we were discussing these levels, right, around these levels around 112, 111, the latest weakness we've seen here as a possible demand. And over the course of 3 months, right, we were trying to hold, even 4 months, we were trying to hold with attempt to rally in June, right? July, huge breakdown below the low from the June of 2017 as well, right? In that case, next level is of course the psychological 110, but here from this monthly perspective, the next possible demand is a little bit lower, and it's down here towards this breakout level, right? And in that case, we are talking about the levels well below 110. We are talking about 108.90, 108.30. But I think with current development, we are about to get back into this monthly chart. But let's discuss daily chart because it's gonna be it's better visible, right? Let's check what we had in April 2017. Do you guys remember what we had in 2017 in April? Over here, it was the French presidential election. All right, French presidential election over here. So it looks like we might revisit even these levels And in that case, we are talking about the levels closer to 107.50, 107. So that's possible target, as long, taking into the consideration this daily chart, as long as we are below the price action related to the ECB, to this tweezer bottom right after, and this rally, right? So as long as we are below 1160, 1225, 1250, we are good to go and try to revisit this gap post French presidential elections, right? Of course, we do have this huge possible demand based on the weekly, but gap is gap, right? So I do expect some bouncing around 110. Of course, it's a psychological level. It's natural. We are going to see the rally. So from the medium and long-term perspective, you have to be a little bit more patient. And going back to the monthly chart, there is also huge development, and in the long run, parity cannot be ruled out because of what happened yesterday. Just my few cents. We were discussing those equal moves already, and that's well below parity. All right, but we're trying to hold this weakness, latest weakness. Now with this breakdown we witnessed it previous month, we can get back into that idea from the long-term perspective on euro dollar. Of course, what's very interesting from our perspective is intraday price action. In that case, I'm going to watch the levels related to yesterday low, today's daily open. In case of the move higher, of course, we cannot rule it out, retest of the Monday low. Okay, so let's switch to the hourly chart. And that's the key intraday level right now, key intraday zone, this supply here. Okay, and then Monday low, the relation to what we've seen into the and post ECB. Okay, especially that if we are going to, if this Tokyo move to the downside, it's going to be manipulated. So as you can see, this zone might be in play. Okay. So looking for opportunity, intraday opportunity to try to sell euro dollar on that rise towards 1080. In case of the breakout, I'm going to try to buy 1060 with very tight stop and retest of the Monday low and resell here. Okay, so that's the thing related to euro dollar. Now, two words about the cable, because we are going to cover cable a bit later because of the Bank of England. But of course, we are testing this 2120, 2080 level again. During the Tokyo session, we broke yesterday and Tuesday low, okay, still trying to fight around 120. Shame they didn't hit our selling level 2280 yesterday with this spike higher. Strong counter move after the I'm talking about the yesterday, right? We were moving higher, and then towards end of the session, strong counter move because of the FOMC, because of the Powell, negative upper shadow, attempt to break lower, and all about Bank of England later today, all about the Carney. And the question is, either we are going to hold 120 or we are going to see the huge breakdown similar to what we have on euro dollar, right? Bank of England is the one thing. The second thing is, of course, no deal Brexit. The chances are growing. So overall, as long as we are below 2280, 2320, that's what we discussed yesterday, day before, that from the intraday perspective, looking to sell Rileys. Now, dollar yen, and here is a little bit different story, in my opinion. A little bit different story, in my opinion. And now I'm going to try to explain why. Let me make some cleaning here. Just to be on a safe side. Okay. A little bit different story, and I'm about to explain you why in a second. Okay, so what we were talking about, right, was the February low. All right, February low. Okay, and guys, compared to what we've seen on dollar index or what we've seen on euro dollar, here is a little bit different story. Meaning that we had the open in February around 108.86, right? And we close the July, right, 108.74, 108.86, 108.74. So there was a show up, a little bit of upper shadow, all right, but the monthly close is below. Now I know that we are trying, based on the overall dollar hurrah optimism, we are trying to push prices higher here, but that's probably right now the only dollar pair I'm not so bullish yet. I'm not so bullish yet. All right, so let's switch a little bit lower from the weekly chart perspective. Okay, where we are, that's gonna be, looks like that's gonna be a key week, and the levels close to 109.70 might be the key with stops above 109.92. So 110 psychological level, right? Because from the monthly chart perspective, we might see higher levels. We might retest half of this breakdown candle, right? Let's make the measure. We might test 109.90, 110, right? The low from the March, right? Might be the case. We might try to test even higher levels. The thing is, if we are going at the end of the month, if we are going to be below February open, that medium term is gonna be negative. But as of now, especially that we are trying to hold above monthly open right now. Let's have a look from the weekly chart perspective. There is a still possibility. This ISM number today might be interesting, right? So for now we are above weekly open, and as long as we hold above weekly open, of course it's positive. Once we going to get back below 108.60, 108.40, it might start to look negative. Now, why I'm talking about this? Because with this overall hurrah dollar optimism, everything is alright, but because of the Fed, the stock market didn't like what happened yesterday, right? And of course, we know when there is a risk of, yen might be the silent hero, right? We are about to check the indices in a second. So let's switch lower to the daily chart here on the dollar on the dollar yen. All right, where we are, right? We are testing right now. We are testing the important broken levels from the daily chart perspective, and if we are going to add some smart dynamic line connected through the latest stops over here, you see what market is starting to build? Upper shadow. Of course, right now Monday high is working as a possible demand, but I would watch very, very carefully dollar yen. All right, huge move during the Tokyo session, trying to create some kind of the flag. Watch out. That's the only dollar pair I'm not looking to buy. At least I'm not looking to buy yet. Okay. So now, because we were talking the dollar yen and we were talking the yen, let's have a look what I've been thinking about when I mention stocks. Let's start, and we have to, because it's the beginning of the month, we have to check this higher time frames chart, right? And you know, guys, for me it was yesterday, from the dollar perspective maybe, but from the indices perspective it was like almost impossible that they are gonna to do what they did, and they did it. Huge upper shadow, possibility of the swing high creation. So the high from the June, high from the October, right? We hit those stops and no continuation. So there is a little bit light of the tunnel when we are talking about the bears. All right. So I'm going to look for the possibility what was the high in June? 26,909, 26,909, 26,909. So what I'm gonna to look for today, that we are going to hold the June high and start to create swing high with confirmation. Of course, it's a monthly chart, monthly close below previous month low, right? But I'm gonna to watch from the intraday perspective. Cannot be ruled out that we are going to make double doji to the upside. Of course, the rally cannot be ruled out, right? But I'm talking about the bears perspective. And very thin line on the sand. $26,611, 26,611. previous month low, as well as the levels close to opening level of May, right? So as you can see right now, very narrow, and it's gonna be very interesting. From the intraday, from the daily chart perspective, market is trying to negate this breakout to the upside here on DJ, right? So from that perspective, retest of that broken levels, retest of the 30th of July low, in that case 27,000, that might be some kind of the opportunities from the bears perspective. Now bulls, again, we are very close to where I do expect some bullish activity, right? This 26,600, let's say 26,500, this line in the sun. Let's draw this line in the sun, and then below it's 26,000 psychological level, right? So it's still not that it's a very, I can't call it very bearish, but there is a light in the tunnel from the bears perspective, right? Let's have a look what we have. Nasdaq. If you remember, we were drawing this line. There was a first attempt, failure, another might be something similar to head and shoulder. Look, I'm going to look for a retest of this latest low, and we are talking in that case about something closer to 7,900, right? 7,920-ish. Let's have a look. This attempt to move higher. Let's create something similar to head and shoulders. If you don't like head and shoulders, there is also possibility that there is a trend line break and we are about to retest. I wanna see upper shadow. Okay. So also here there is a light in the tunnel from the bears perspective on Nasdaq. Okay. Also, I've mentioned that the if there are going to be, of course, I talk about this before that happened, guys. That's the very important. I talk about this before that happened. That if dollar is going to be stronger post FOMC, it might be especially negative from the commodity block perspective. And that's what we seen yesterday. Aussie much lower. Canadian much lower. There was some post Canadian GDP which we were covering live. We drew some lines and they held the levels, right? But because we are running a little bit out of the time, we are going to discuss this commodity currencies during our one of the next meetings. Okay. So, we discussed majors, we discussed indices, so let's have a look what we have from the gold perspective, right? And there was an attempt to go higher. We didn't touch the supply base on the weekly, so that's negative, right? We are testing first of the possible demand based on this old range. But because the major levels are a little bit lower and because we were trying to hit some stops towards 1450, probably we are about to try to look for stops below 1400 towards 1380, 1360. Just the reminder, we were discussing this, right? That's the daily chart. Of course, there is a possibility from the bears perspective and bulls perspective in relation to the risk on risk off sentiment, right? So in case we are going to see breakdown on the indices, it might be the time here eventually for bulls. Right now, it's very strong dollar, and we are testing the first demand we have here, but we have to remember where is also where is the closest supply, right? And this broken zone over here that would been tested during the Tokyo session. So as it's the first day of the new month, right, I'm not gonna be surprised if the market will try to retest Tokyo high, will try to look for liquidity, right, a little bit higher, and will reject that level. So the bulls are fighting, trying to hold 1400. The bears will try to fight above 1420, right? And below that we have 1390, 1380, and then 1360 to the downside, and trying to get more neutral on gold. We have to get back the best above the most recent high here, so close above 1450 on gold, right? So based on this intraday chart, based on what we discussed a few times, we are retest the broken trend line, strong move yesterday to the downside. I would look for continuation, and I would look for levels below 1380 towards 1360, and only move and close above 1450 will cancel this short-term bearish view. Both private data API, sorry, and EEA yesterday showed bigger draw. So oil price, we saw the rally of the oil prices. Unfortunately, we didn't hit the levels we were discussing. Furthermore, market closed below some psychological short-term levels. All right, and that looks bearish, right? We saw retest during the Tokyo session, and we have some kind of the rejection. The move and the rally was based on the top of the previous consolidation, right? But it looks heavy for now, and as long as we are below as long as we are below 58.50, it looks bearish for me. So I'm going to look for some kind of the selling opportunity around these highs, trying to create this over under. So I'm going to make it bigger. That's possible supply in my opinion. So one of the way you want to approach this, it might be this 1-to-1, let's say, that way. Something like this, right? So I'm trying this 58.30. But again, today top event is a Bank of England, but of course the background is gonna be the market comment in relation to the FOMC. Yesterday, before we had the FOMC, I've mentioned that, for example, Bank of America Merrill Lynch, their analysts mentioned that the chances of some kind of the intervention on the dollar are increasing, and post FOMC I think they are even bigger. So cannot be ruled out some kind of the Mr. President Trump verbal intervention, but that would be probably big gift for the market. And I think that's what President Trump knows right now. You don't want to see the spike and then rejection, because it's adding to the pressure. So very interesting next few days. Again, right? That's what I told you. I wasn't so sure. We had some plans yesterday. Finally, I didn't make any kind of the trade. But right now, it's much more clear levels. And yes, I'm ready. Hopefully, you are ready as well. We have to wait just for our levels we discussed. So, guys, don't be trapped here at the beginning of the London session. Be ready for Bank of England Live market coverage only here on Light Forex Global YouTube channel. You're more than welcome to join me quarter to 1 p.m. CET, quarter to 12 a.m. London. It was my pleasure to be here with you. See you within the next few hours. Goodbye, guys.